Hey guys, welcome to another episode of the Ferrum Academy. My name is Tom from the marketing team here at Ferrum Network, and please welcome Ian, the COO of Ferrum Network. Hey Ian.
Hey Tom, hey everybody. How you
Hey.
doing?
Super cool, actually, because this is another video that we're producing for the Ferrum Academy series. And today we want to focus on something that people search for probably the most nowadays, which are basically the differences between the bear and bull markets, what are the hype cycles in crypto, and what to do in general, during the bear market. So, what we can start with, maybe Ian, you could explain to us what are the differences and what actually are the bear market and the bull market.
Absolutely. So before we dive into the nuts and bolts of today's Ferrum Academy video, just want to uh, set forth a caveat here or a disclaimer, which is none of this is financial advice. People need to do their own research. They need to make decisions for themselves. They need to invest only what they're comfortable investing and ultimately comfortable losing. So that's you just want to get that out of the way before people make any decisions based on this video. This is really educational and really largely our opinions, nobody else's. So to answer your question, though, if you're going to be successful in crypto or investing in general, if I'm being honest, it's important to understand the concept of the market cycles. So people talk about bull markets and they talk about bear markets with respect to market cycles. A bull market is when there are more buyers than there are sellers. Really, is fundamentally what is happening, and asset prices are increasing. Now they're going up. Usually, this is a phase company with mania. There's people making money. It's exciting. Yay. Bull market tends to be a very euphoric time. And conversely, you have a bear market, which on the flip side is there's more sellers of an asset than there are buyers. And so the prices are going down. The thing to remember about both of these periods is that neither of them last forever. So you really need to plan accordingly, right? When you're in the moment, it's sometimes hard to put yourself in the shoes of, the future. Understand that in 3 months from now, things may be different. So in a bull market, you need to be thinking about and preparing for the inevitable bear market that's going to be coming at some point. And timing these things is very, very hard. And we're not probably going to go into things like technical analysis or fundamental analysis on this video, but it's hard to time, but you just have to understand that it's going to come at some point. You have to plan accordingly. They say, the money is made in the bear market, which is sometimes counterintuitive, but it's actually true because the key to investing, it sounds simple and sort of stereotypical, but buy low, sell high. I mean, it's not that it's not that much of rocket science. But in a bull market, asset prices are high. So normally that's a time when you actually, in a perfect world, you want to be selling. And the bear market prices are low, and so that's the time to be buying. There's Warren Buffett and others coined the phrase, buy when the market's bloody, or when there's blood in the streets, meaning the market's down. That's when you want to be buying. Conversely, when the market's green, you normally want to be selling. That's, again, not financial advice, but typically how you're going to succeed. Very simply put. So understanding what the cycles are, where you are in the cycle, that it's not going to last forever, and making a plan to invest and then sell. That's going to be critical for really anybody to succeed. And if I'm talking about investing in, this is not just cryptocurrencies. This is really any asset class, because stocks have bulls and bull cycles and bear cycles, although they tend to be spread out and less extreme. Even real estate has periods of bullishness and then periods of bearishness. So any asset class can experience this, and so you need to understand where you are in the market and plan accordingly.
Okay, thank you. But when we discuss bear and bull markets, right? They come in, like you've mentioned as well. They come in cycles. But apart from the, well, in the bull market, when prices are actually quite higher and people tend to sell, that's when people make profits. The bear market is when people also panic sell. They do that. It's not financial advice to do anything, but some people do not hold onto their assets. But between those two, and actually when there's a transition going from a bear market to bull market and from bull market to bear market, there are some hype cycles in the crypto space. We've had DeFi Summer. We've I don't think we've actually gone through the NFT craze here because I think the NFTs are still quite high. People, it's still in demand. People are still crazy about them. But what can you tell us about those? What can you tell us about the past? So let's, like we've had crypto for the past 10 years, and how does it resonate actually with what we have in right now? So as in 2022, what do you think? What's the cycle there? Is it are the cycles in crypto actually every single time the same, and they last the same period of time? How does it work?
Yeah, so there's a couple things to understand when it comes to cycles within the crypto space. There are cycles with respect to specific trends, specific subcategories of assets. So whether that's DeFi, and you mentioned the DeFi summer, I think it was 2019 or 2020, when that asset class was exploding. NFTs you mentioned, which is in a boom moment, really as we speak, to a large degree. And then you have other categories that come up periodically. Metaverses were very hyped up for a while. Now there's a new category called move to earn. So no, and normally these are associated with a project or a set of projects coming out with some sort of innovation that really resonates with the market, right? So the concept of a metaverse is kind of a mind-blowing, futuristic concept that investors got really excited about. In fact, Facebook rebranded their entire company to Meta. So that obviously captured the imagination of investors, and that was a hype cycle. Move to earn, another category that has come up. There was a big project called Step In that did really well, and now other projects are sort of following in their footsteps. Play to earn, the gaming sector had its day in the sun, NFTs, and so on. So what I think you need to understand about these cycles is, like with any cycle, they don't last forever. And while it's great to get out in front of one and predict it, that's very challenging to do. And it's probably not it's maybe not the best strategy to start trying to chase those. However, there is a moment in time when there is a maximum opportunity where the cycle has just, that category has really just started to take off. It's not inundated, meaning there aren't thousands of projects within that category. Normally what happens is after enough projects, including subpar projects, inundate that particular sector, and people begin to lose money on these lesser projects, even though they claim to be a metaverse, claim to be some game or whatever, that's when the cycle begins to end. So you need to be aware of where we are with that, and then chasing the hype is it's a challenge. It's not normally advisable, I would say, to try to jump from the one to the next. How we view things at Ferrum, because we invest in a lot of early stage projects, we invest in what we view to be projects that are up and coming within a particular sector, is try to evaluate it from a different standpoint. Not just, are you a metaverse? Are you claiming to be a metaverse and therefore I'm going to invest? Well, okay, you're claiming to be a metaverse, great. Show us how your metaverse, what it looks like. How far along are you in the process of building it? When will it launch? Who's the team behind it? Have you launched metaverses or similar kind of things in the past? improve all these things to me. Show me your LinkedIn profiles. I want to see references to the previous things you worked on. I want to see demos of the game or the metaverse you're building. Better yet, I want to use it myself. I want to download it and start using it and see if it's a good product or not. So there's all these various things you can do to perform due diligence on these projects before just saying, okay, it's a metaverse or it's a game, and therefore I'm investing. Like, we need to do more enhanced. Investors need to be a little bit more responsible for that and do enhanced due diligence, and not just decide to invest. This is my personal opinion, by the way. You can do what you want, but the way that we've been successful is by doing enhanced due diligence, understanding, okay, is this a team or project or company that's going to be able to follow through on and achieve their goals, and is that then going to bode well for the investors? That takes training. That takes years of understanding crypto and early stage investing and stuff like that. So no, I'm not expecting anyone to understand overnight how to evaluate a company, but there are certain things to look at, right? Like I mentioned, team and product and so on. So it's very important to do your due diligence on those companies. And before we go to the next question, I want to talk about the sort of cycle as a bigger concept, and that's really tied to Bitcoin. This is outside of any sort of specific category of project. I'm not talking about that anymore. I'm talking about Bitcoin and its impact on the market as a whole, and the cycle that naturally occurs and in fact programmed within the Bitcoin protocol that everybody needs to be aware of. So Bitcoin has a concept called the halvening that's baked into its code. And this has to do with the amount of Bitcoins that are rewarded to the miners every time a block is mined. We did a video about the Bitcoin blockchain early on, which people can refer to, but the concept is, miners, they verify transactions, they maintain the Bitcoin network, they're rewarded in Bitcoins. Every 4 years, that amount of Bitcoins that they get is halved. So it goes down by half. So I think in this current halvening cycle, by the way, and the halvening cycles happen every 4 years.
4 years.
So so every 2 years, excuse me.
4.
Wait.
I think.
Four.
Yeah.
But then it does a funny thing to the cycle, where the cycle becomes usually 2 years of bullishness, 2 years of bearishness. So every 4 years, right? So every 4 years, it's going down half. So this means that the amount of Bitcoin coming into circulation is going down over time, right? And those 4 years marks that moment where it goes down. So how does this impact the cycle? Typically, and look, we can't predict the future. We can just look at other cycles and understand, okay, it may react the same or similarly, or maybe end up being different, right? People are now suggesting that because of the influx of institutional capital into Bitcoin, that maybe the halving cycles will become less meaningful. I don't fully buy that, but I don't know if we're going to see the days of 60% drawdowns in a bear market on Bitcoin anymore. It may not be that extreme of swings, but you will still see, I think, the cycle that behaves in this way. And so normally what happens is you have the halvening, and then there's it's not like on the day of the halvening, all of a sudden the market just turns bullish. I wish it were that simple. There's usually a period of sideways trading or what have you. And then eventually the fact that the less Bitcoin's going into the supply does have a positive impact, because the miners can't sell as much. They don't have as much to sell. And so there isn't as much Bitcoin being sold every day. And so this eventually has a positive impact on the price. And that's the start of, normally, if history is any guide, a 2-year bullish period, right? And we're sort of, still in that phase now, maybe the tail end of the last halvening, which happened in 2020, if I'm not mistaken. There's another one in 2024. So 2 years of usually a bullish period, and then 2 years of bearish. That is just very simply how it had gone down the last cycles. May be different this time, but I think it's very important for anybody who's investing in cryptocurrency to understand the halvening, the impact on the supply of Bitcoin, the impact on the sell pressure of Bitcoin, and what this means for the cycles.
Okay, this is good. This is brilliant. Thank you so much for explaining this to us. And final question today. People, like I've mentioned before, tend to panic sell when it comes down to bear market. They don't really know what to do. The morales in the space and the communities are usually a bit down. What can people do in the bear market? What should they do? What's your opinion on this? What do you do?
I think this is where the concept of conviction plays a critical role. The concept of education, understanding, plays a critical role, and also just being able to evaluate what makes a successful cryptocurrency, what separates the wheat from the chaff, so to speak. Because look, you actually can make tremendous gains in the bear market. I'm not talking about from shorting or anything like that. I'm just talking about investing at the right time, having the conviction to hold that asset, even if the price is faltering. And because or you have reason to believe that when the bull cycle returns, that asset will have appreciated potentially dramatically, right? And that's when that's your profit opportunity at that point. But without that conviction and that understanding, and knowing what makes a project likely to be successful, you'll likely panic sell, right? And so there's a few sort of tricks to the trade when it comes to conviction and understanding and research and so on. And it comes down to a few things. For one, I think it's important not to have too many different investments. Why is that? That's because if you have too many, you will not be able to meaningfully follow any particular one of your investments. And so you won't know whether there's been activity happening. Is there products being developed, or is there announcements being made? Is there partnerships? Are they growing? Are they hiring? Are they on an upward trajectory from a fundamental business standpoint? Or conversely, whether the project's gone silent. You won't know because you won't be able to follow 50 different projects, probably, unless you're doing this full time. And even then, it's very, very hard. So take into account your personal life, your work situation. How much time do you really have in your day to monitor the Telegram chats, the announcement channels, the Twitter channels, the Medium posts, the YouTube channels of various crypto projects? And this is, mostly have to do with the lower cap investments, but I don't even think just the lower cap ones, because if you look at the top 100 or even let's say top 20 coin market cap projects every cycle, they're different. Mm-hmm. So just because something's in the top 20 today does not mean in 2 years from now it's going to be there. Mm-hmm. It could be that the founders or the team or whatever gives up, or they pivot into something that's less popular, or some new trend takes its place, whatever. But if you aren't monitoring that project, you'll never know whether to sell or buy or double down or whatever. So not having too many investments that you can't monitor the progress of each one. And you as an individual need to determine how much time do you have to dedicate to this, and what's that number? Is it 5? Is it 10? Is it 20? Maybe it's only 2, right? Or 1, and that's okay as well. But just monitor and understand what's happening with respect to each project. Secondly, you should have an understanding of what it is that project is building or doing, or what it has already built and done, and what does that mean for the price appreciation of that potential price appreciation of that token. There's a concept in crypto, and we spoke with this on another video, called token utility. What is the use case of that token, and will there be enough demand for that token, assuming that they can actually achieve their goals when it comes to the token. So a lot of projects don't even have a lot of token utility initially, right? And you're just hoping that they launch that product that then causes demand for the token, which then causes it to go up. So, well, let's just talk about from this case of them already having a token out with a product out, that scenario. The question then becomes, is there a demand for the product? And then does the product require, or maybe not necessarily require, but incentivizes a user to use the token, right? A simple example is about Binance.com, right? It's a huge exchange, the biggest exchange in the world by volumes, right? And they have their token BNB. Now BNB now has its own blockchain, which is a whole other story. But initially, they just had the BNB token as a asset that you would hold in order to get lower fees on the exchange. Well, there was a time when Binance was like the biggest exchange, the main exchange. This was before DEXs. So you knew or had reason to believe that there's utility for this token because you need to hold it to get your reduced trading fees, and that there'd be enough people that would be interested in that, where they would want to do that, right? And they would see the value in that. And then other people, they would think too, wait, if I see the value in this, other people see the value in this, so then it becomes self-fulfilling prophecy of doing well. So that's a great example of they built a product that people want to use, their trading platform, and they incentivize people to hold their token for that, right? That's token utility. So when you're evaluating a project in a bear market, what's the token utility? What's the product that's coming out or is out? Does it require using the token? And if so, it's likely that even though the market's bearish in this very moment, the token's not performing well, that when the market turns bullish again, people will look and they'll see this project and this product, and they'll want to invest in a token in order to use the product, or knowing that others are going to do so. So token utility is key, understanding the role between the product and the utility of the token. By the way, that applies for layer one blockchains like Ethereum. That applies for almost anything in the crypto ecosystem. What's the token utility? Why does someone need to use this token? So that's understanding that's going to be key to your bear market strategy. And then also, look, patience, just patience. It's frustrating, trust me, when you invest in a project, it's seemingly doing all the right things. There's token utility, the community's strong, it's a very active project, they're making announcements, they're making partnerships, they're building great technology, and yet the price is just stagnated or even going down. That's a very challenging situation for investors. And for this, I always like to go back to the famous story of the guy who spent Bitcoin to buy pizza. Yeah. His name was like Laszlo or something. And he spent 20,000 Bitcoins or something like this to buy some pizza. This is the early days of Bitcoin. No one really knew whether it would be a thing. So I get why, someone might want to do this experiment. Oh, can I actually spend my Bitcoins? Cool, I bought pizza. But now we know the story that those Bitcoins will be worth like billions of dollars. Yeah. And like, do you want to be that guy? So why do I tell that story? Because sometimes the best strategy is to not obsess over the day-to-day price movements of an asset. If you're following a project that you have conviction in, that has token utility, that's doing all the right things, then you don't need to look day-to-day. In fact, you probably shouldn't look day-to-day, because the market is so volatile, especially these low-cap assets, that it could go down, but not related to the fundamentals, just because Bitcoin went down. Right, Bitcoin went down 5%, so altcoins went down 20%. It's like, but it's just the market. It's not anything to do with the project. The project's still a sound project, right? Like, you look at Ethereum. Let's look at Ethereum, for example. As blue chip gets in crypto, there's Bitcoin, there's Ethereum, there's everything else. That's my opinion, anyway. It stood the test of time so far. I don't think it's going anywhere. I think it's as blue chip as Bitcoin, if I'm being completely honest. But even that is down, like, it's May 3rd today. 3 or 4 or 5 months ago, it was at like 6,000. Now it's at like 2,000. Nothing has changed fundamentally about Ethereum. In fact, it's probably only gotten stronger because they're with something within their protocol burns Ethereum every time, a little bit of Ethereum every time there's people are spending it for gas. So Ethereum's only gotten stronger from a fundamental standpoint, yet the price is down like over 50% or whatever. Uh, this doesn't mean Ethereum is bad. This is just market cycle.
Mm-hmm.
So if you were just patient, you understood what you were invested in. You didn't get scared by the ups and downs because you weren't obsessing over the day to day. You actually have a chance to do well.
Mm-hmm.
So that was the thing. Educate yourself, understand what the projects are building and doing. Don't invest in so many that you can't monitor them all. Understand what the token utility is and why is that going to drive value to the asset. And then, be patient and don't worry about the day to day ups and downs. It's going to be okay, right? It's going to be okay. Again, not financial advice. This plan is not going to work every single time, by the way, because there's black swans that can happen. A project could be great, and then they decide to do something, and it just crashes it because it was a bad decision, or maybe they even give up. Like, look, there's so many risks to investing in crypto that we can't possibly encapsulate all of them here. And I think if you follow the simple tenets, you'll have a fighter's chance at doing well and actually making money in the bear market.
Mm-hmm. Mm-hmm. Yeah, I agree with everything that you've said, and I also have another tip for anyone that's actually struggling in the bear market. They just the morale's down and they're thinking what to do. Come and join our community. Join us on Discord, join us on Telegram, and follow us and subscribe to our channel on YouTube. Watch all of our videos. That's a great entertainment as well as educational content. So please do that because that's brilliant. And we're also going to make great friends on Discord and Telegram. So literally, all you need to do is just click on the links in the description. Come and join our community. Ian, thank you so much for sharing your opinions, not financial advice, and your expertise in the market. Thank you so much. I cannot wait for the crypto winter to be over and that we're going to be in a bull market with Ferrum.
We will get there, folks. That I guarantee. There will be a bear market. Bull market, and there will be a bear market too. But Tom, you made an excellent point. There is more to life than the markets, and there's more to life than making money. And so whether you want to hang out in the community, whether you want to get outside, whether you want to hang out with friends and family, whether you want to pursue a hobby, these are all very, very important things for your mental health. Let's not get too wrapped up in this one aspect of life, which is investing. There's a great big world out there. Have some fun, get out there. Don't be singularly obsessed about any one thing. And that's also going to bode well for you, I think, as an investor.
Well said. Thank you very much, Ian.
Thanks so much.
Thanks.
See you next time.